As far as silver is concerned, and this is an opinion, when I'm, like I say, I'm not going to talk much about what I think is going to happen unless I pretty much have a good idea. And with silver, I think it's the ultimate best investment for the post collapse. I mean, there's going to be an economic recovery. Just the ones that they talk about, man, it's just not feasible for that type of economic recovery to happen. And the recovery, whether it be 2013, 14, 15, it makes a lot of sense that silver is going to do magnificent. The reason why is because there's not much silver that's around, a low supply, but the demand is going to get higher. So over the next short-term period, it becomes a new form of money, in the sense that when you need that milk, when you need something in which you don't have, you'll be able to purchase it with silver. And by buying this in advance before all these prices spike up, that does give you a higher leg towards being able to buy those products without paying that inflated price. Because one thing we're going to most likely notice is a lot of the prices of commodities are going to go up and down over other commodities. So, for example, as of the start of August, if silver is, say, the bullion coins go for $17 an ounce, well, let's assume that a product that normally goes for 17 now, maybe when silver has the higher gain, when the shorts get covered and all of this stuff comes through, then you might be able to get more products with that silver, and in a sense you not only would be protecting your value because of that, but you would actually be increasing your value. That's really what investing comes down to, is finding the assets that will outperform each other. Now, of course, you still want to have the best well-balanced portfolio that you possibly can, because putting all of your eggs in one basket, it's a gamble. It's nothing more than a gamble. I'm not saying it's a bad idea, because sometimes you have no choice, but you really want to diversify into many different sections. Now, what I have written down is a list of different sections of things to invest. Each one of them is very broad. So I've been talking about silver, the first one being real metals. So gold, silver, copper, aluminum, zinc, any metal that you possibly can think of. And if you're going to use a balanced portfolio, then you want to have not only different types of metals, but you want, say, if you're doing silver, maybe some bullion silver, some scrap silver, and even bars. Maybe you have a roll or whatever, just so you have a different amount of variety, especially if you plan on trading it later. It's almost like you're going to have like a little store as far as different assets, silver being one of them, and you'll have more of an option for people to be able to look at through this barter system. So that's why I think that is very important. Now, I know my personal feeling with gold and silver is I don't actually buy gold, and the reason for that is not only because I think it's overpriced as far as the gold to silver ratio, but I do think silver will outperform gold. I also think it's going to be easier to trade silver, as the price in itself is a big reason, along with its future value, because post-recovery, silver is going to do so amazing because I think of solar panels needed and the less amount of it. So when people will be buying silver, I think, in the 2009, 10, even 2011 time frame, it's going to be used a lot like a money supply system. But on the recovery, when it happens, I think a lot of it's going to be purchased for its melt value. So the solar panels are going to be built, and most likely at a higher level. That's why I think it's going to be such like the investment of the lifetime, if you will. So that's why I think silver is really important. Now, there's other metals too. Now, if you live in Canada and you collect copper, these pennies here are all pennies from 1996 and earlier. They're like 100% copper. In the United States, it's 1982 and earlier. And if you were just in Canada anyway, if you were to buy rolls of pennies, you will notice that you will get a high yield of copper pennies. Now, even the zinc pennies that you get, you're going to lose on its monetary value. I'm not denying that, but you're not going to lose as much as you will with the paper currency, because 100 pennies you get that are copper are worth more than the value of it, but 100 zinc pennies are worth less. However, you look at and saying definitely in Canada, the $1 and $2 coins, their melt value are worth very little compared to its monetary value of $1 and $2. So I'm not holding on to the $1 and $2 coins here. I get rid of them pretty much as fast as I get them, because I don't like its value that they have with it. Also with the nickels, this is a big one. This works for both America and Canada. If you were to get nickels in Canada that are years 1981 and earlier, with some steel ones in the 40s and I think the 50s. No, they had a few years of steel. But you're getting real nickel, and they're worth about 8 cents a nickel, and the melt value is 5 cents. So you're already getting a deal when you get those nickels. Now, the nickels that were made from 1982 to 1999, they contain 75% copper and 25% nickel, which means they're roughly at about 75-80% of the value of the nickel. So you really are not losing on the collapse of the dollar, if in fact you're still going to gain, because these coins are still going to be needed or wanted as we move forward, especially when you want to collect so many different types of metals, so many different just a lot of variety of your collection, because this helps out as far as what people want. You can have a lot more that way. So the coins have more nickel and copper, and the American coins, as far as what I have read on Wikipedia, except going back since they've done the wartime nickels, every single nickel they have had is 25% copper and 75% copper, 25% nickel. Basically what this means is by Friday's close, 5-cent nickel is worth almost 4 cents right off the bat. So if you were to just go to the bank, buy rolls of nickels, then essentially what you're doing is you're guaranteeing protection against the dollar. And the big reason why is, if this whole dollar collapse thing is false and it doesn't happen, well, then the only issue you have is returning these coins back to the banks. And I mean, that you can do over a day. I mean, it's pretty easy to return coins to multiple different banks, especially if you live near different city areas as far as that is concerned, because the coins do better than the papers do. So nickels, I think, are the best coin. Pennies are very good coins too. Even if it's the cheap pennies, they still are going to maintain a much better value than the other coins are going to do. Dimes are okay, but I mean, they're just so small. And quarters, the value of a quarter is a lot high, meaning you need 4 of them for $1. And those coins don't do quite as well, but they still will be an improvement over the $1, $5, $10, $20 bill, and so on. So that's the type of strategy as far as the coins are concerned. If you live in Canada, I recommend nickels and penny rolls. The United States, nickels and penny rolls aren't so bad also, just as a form of collecting. I mean, now and then you go to the bank, buy $10, $20 worth of rolls every now and then. Not really a bad strategy. In fact, I think it's a very good strategy.